Welcome back, and joining us for a look at the day's market moves is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. It is D-Day for the Fed. Of course, we will be getting that decision at around 8 p.m. This evening, South African time. Are the markets nervous at all about that decision? Should they be nervous?
Hi, thanks, Nati. I think overall, the Fed will probably keep rates on hold at this meeting, but will signal that we are going to see rate cuts coming. Certainly, the next move in rates are down. We've seen inflation come down quite significantly and is trending in the right direction. So there is a lot of room for the Fed to cut rates, and the messaging out of the Fed will be quite important. I think what you have the market looking for in terms of the number of rate cuts versus what the Fed will guide for is going to be key in terms of the outlook.
All right. Well, out of the US, we did see those earnings coming out, Alphabet and Microsoft last night. They did beat on revenue and also on the bottom line on those results. But the market reaction not quite in line with those beats. What was the market reaction about? Did it have anything to do with the earnings, or was it something else?
I think if you look at, as it's come to know, the Magnificent Seven, they've had a stellar run. It's all about AI and what it's going to do to the businesses. So there's a lot of good news priced into these stocks, and the market is sort of taking a breather in terms of what's priced in. But if you look at it overall, Microsoft had very strong growth, both from a revenue perspective and from an earnings perspective, and they're doing well. The cloud computing side is doing fantastically well. For the likes of Google, advertising revenue is still robust, but maybe the market was looking more in terms of how AI is going to assist them to grow much faster. But I think this is just investors taking some money off the table after the very strong run that we saw over the last year and a half.
Well, as you're talking about fast growth, a counter that has not really been growing, bring it back home rather. Sentio Capital, they had an announcement that was out at 5:30 yesterday after markets close, of course, saying that the board has now resolved to pursue an unbundling and separate listing of We Buy Cars. Of course, this isn't anything new because they did flag it in their results commentary last year. But I think now it was kind of a more certain, a firmer announcement. We did see that share price surging 9% today. Is this a thumbs up from shareholders that this is the best thing that they can do at the moment?
I think it's a step to unlock some value within the company. The big problem area has been SA Taxi, and they've got massive levels of debt that needs to be sorted out. And by unbundling We Buy Cars, you're removing the entity that is making money, that is generating profits, and also avoiding some of the cross guarantees of debt between the different entities that Sentio Capital holds. So I think they want to move into that direction, realize some value for shareholders, and list We Buy Cars separately, which is a decent business overall.
All right. Well, let's get into chicken. Astral Foods came out with a voluntary trading update for the first quarter of FY24. So, of course, this is the first trading update that the company has come out with after the results that were released last year, where they experienced their first loss in their 23-year history. So, of course, a lot of the headwinds were things that Astral could not control. But they have set out to, sort out a few things as they rebuild their operations and balance sheet. So much so that they expect their headline earnings per share for the interim period to be up 300% more than the previous comparable period. Just talk to us about the update and the transition that the company is going through.
Yeah, I think it's important to note that they're coming off a very low base.
Yeah.
Last year was almost a perfect storm for Astral. They had massive amounts of load shedding, which cost them just in terms of not being able to slaughter the birds fast enough. And that also filtered through in terms of the feed and the amount of feed that they had to pass through the business and the costs associated with that. And then you had water issues, you had avian flu. So there was a whole confluence of factors that really affected them significantly last year. What we're seeing now is some normalization of activity. Load shedding so far is better than last year. And then we've seen, normal avian flu and the like starting to normalize. So I think overall, the business is on a path to recovery. There is the impact of duties, and the government did lower some of the chicken duties that were in place. But I think, that's going to have a smaller effect given the port issues that we have around the world. But nonetheless, it is a headwind for the likes of Astral.
All right. Well, let's get to your stock pick for today, Imtiaz. What will it be?
I'm going with AVI. AVI is a very well-run and well-managed business. They've got a number of top brands in their portfolio. They play across the different grocery market in South Africa. And what we've seen of late is commodity prices and the input prices that AVI is exposed to has started to roll over, which should bode well for their margins overall. I think you will see a recovery in the INJ, which is the fishing division, as well come through. And, from a balance sheet perspective, they're very robust. They've got capacity to pay out a special dividend. And I think you would expect, not stellar revenue growth, but decent revenue growth with better margins translating into better earnings and dividends as well.
All right. Well, thank you so much for your time and just giving us insights on what has been moving the markets today, Imtiaz. That was Imtiaz Suliman from Sentio Capital.